One of my early stock picks 3 years ago was AppLovin, and it's up over 70% year to date, but up over 2,000% in just those 3 years, quietly crushing most small and large cap stocks while never really becoming a household name. And that's the kind of edge that I'm after. It's not always the biggest name in the news cycle. For me, the best setups have enough heat to show strength, but not so much attention that the upside is already baked in. But I also love the reliability of mega cap stocks being a sure thing with their returns. So I often lean in a little heavier with those mega caps when I feel that they're undervalued, along with support from the small cap potential. With that in mind, I'm going to cover my top 8 stocks that I'm buying in September, names that I believe can ride out inflation and get a huge boost when rates do come down. Overall, I'm not trying to chase the hype here. I'm looking for high growth with enough value to still beat the index. And that's exactly what we're going to break down in today's video. But before we jump in, if you get any value from my videos, please consider pressing that like button so my channel can continue to grow. Let's get started with our first company of Vertiv Holdings, which happens to be one of the most important suppliers powering the data center build-out. I think that we're all seeing that data centers are hitting power and heat limits. Air cooling alone just can't carry the load of today's rack densities. So operators are shifting to liquid cooling and higher efficiency power systems. That's where Vertiv makes the plumbing and the power that lets high-density rooms run hard without over-throttling. By providing coolant distribution units, rear door heat exchangers, direct-to-chip loops, prefabricated power cooling modules, and the monitoring to keep it all stable. And it's starting to show up in the numbers. In Q2 of this year, Vertiv reported just over $2.6 billion in revenue, which happens to be up over 35% year over year. They're also carrying a $7.9 billion backlog, which is nearly a guarantee for their cash flow. For reference, the cooling market was $22 billion in 2024, and it's expected to more than double by 2030, with liquid cooling growing north of 20% each year. In addition to that, Vertiv's PEG ratio is at a 0.8, which gives it that value proposition that I'm always looking for, seeing as how the future PEG for the S&P 500 is nearly a 2. That means that the stock price isn't priced to perfection, and there's a lot of room for them to grow, and this is exactly what I try to research for. And when you look at these financials, they are a sleeping giant. Their revenue bumped up last year, but their margins have made huge improvements, and their operating cash flow started to blow up in 2023. And now their earnings per share forecasts have been consistently beating, which aligns with forecasters giving them over 12% upside for the next year. Let's go ahead and move on to the next company of Arista Networks, which builds the high-speed Ethernet switching and software that stitches modern data centers together. Right now, the industry is standardizing on Ethernet for AI backend networks. The Ultra Ethernet Consortium published Spec 1.0 in June of 2025, and Arista is the founding member. On top of that, Arista rolled out EOS smart AI features that turn Ethernet into AI-grade networking. Think traffic engineering, congestion control, and rich telemetry tuned for cluster workloads. While 800 gigabit switching is shipping right now with a path to 1.6 terabit ports and well beyond that in the next wave. In Q2 of this year, revenue was $2.2 billion, which is up 30% year over year, and their gross margins stayed wicked high at over 60%. And in looking at their financials, where revenue and margins have been consistently climbing, and then you can look at their operating cash flow in the lower left, where it absolutely took off. And in the lower right, they have consistently been beating earnings per share forecasts. And of course, that's why analysts have them with over 15% upside for the next 12 months. Let's move on to our next company of ASML, which we all know is practically a monopoly because they build the machines that make the most advanced chips possible. ASML is definitely the gatekeeper for all advanced chips. Their high NA-EUV tools are finally moving into production out into the market, which they're shrinking features, packing in more transistors, and driving that next wave of AI and devices. These tools can process about 60% more wafers per day compared to the last generation. Intel already has 2 in production, and TSMC is lining up as well. As rollout begins to scale, ASML's installed base is going to grow more, which locks in reoccurring revenue from services and their upgrades. ASML isn't just another supplier. They're the toll booth that everyone has to go through because every chip advance runs through their machines, which makes their growth completely sticky and their free cash flow extremely durable. Not only do I enjoy researching these AI companies, but I also enjoy using the AI myself. But managing all of these multiple AI tools for different tasks totally stinks. One happens to be better for daily questions, and then there's another one that's great for deep research, and then of course we have a third for manipulating images. For anyone out there, it completely breaks up your workflow, and honestly, I don't want to have 3 different subscriptions. And this is where today's sponsor, GenSpark, simplifies it all. It's not just another AI. It happens to be an all-in-one AI platform that integrates and it orchestrates all of the big name AI models that you can pick and choose from. This means that this one subscription covers what all these other standalones can do for you. And you also get access to 169 free AI models that can run locally on your device if you happen to be a power user. And trust me when I say what it can do is incredible, because it can generate polished presentations from any topic, like the one that I created about this video, or mash images like the one we see with Nano Banana with me showcasing this product. It also has super agents that automate multi-step projects, like building this web app that I had created on retirement planning that maps out every year and optimizes it for you. And going even further, GenSpark has its own browser that blocks all ads automatically, making your web experience a little bit faster and cleaner. It also has access to Model Context Protocol, allowing access to other apps and their knowledge, and it integrates with over 700 top apps, like Discord and even your Gmail account. Or if you happen to be somebody who needs to save money, the intelligent shopping assistant analyzes reviews, prices, shipping, and returns to help you make smarter purchases. Between those free AI models, the ad blocker, and the shopping assistant, GenSpark can genuinely save you enough money to even offset the cost. I am genuinely impressed with how the super agent uses the best options across all the model platforms for the best results. So if you'd like to learn more, check out the link down in the description below. Our next company is no stranger, which is Broadcom, which isn't just benefiting from the AI boom. It has structurally transformed itself around it. In Q2 of this year, Broadcom's AI chip and networking revenue hit $5.2 billion, up 63% year over year. And their backlog has surged to $110 billion, giving a lot of visibility well beyond just this quarter. And then they have new product lines like Jericho 4 and Tomahawk Ultra, which are replacing legacy gear, while custom accelerators are opening higher margin pathways with hyperscalers like Amazon and Microsoft. And at the same time, software revenue from VMware climbed double digits, broadening the foundation and adding more reoccurring cash flow. Let's keep this process moving with our next company of Supermicro, which builds rack scale systems for AI. Today, they're already shipping Blackwell-class racks with liquid cooling as the default. Capacity has ramped to about 5,000 racks per month, including 2,000 liquid-cooled, with new campuses coming online just to keep the pace. That pushes their annual output towards $25 billion, which is up from $20 billion last year. In Q4 of fiscal 25, the revenue jumped up over 25% quarter over quarter, not year over year, quarter over quarter. And their story here isn't just demand, it's delivery. Hyperscalers are racing to bring Blackwell clusters online. And of course, the vendor that can ship full, liquid-ready racks fastest is going to be the winner. That's why Supermicro's speed, modular design, and cooling know-how have made it the go-to integrator for all of these AI data centers. And now we'll move on to the next company of Taiwan Semiconductor, the world's largest contract chipmaker and is already probably in most of your portfolios. Today, they hold about 70% of the global foundry market, which means almost every leading chip designer, think Apple, Nvidia, AMD, Qualcomm, Broadcom, they all run critical production through TSMC. Essentially, nobody grows unless they go through Taiwan Semiconductor. And getting a little technical, at the node level, 3 nanometer already makes up 24% of wafer revenue, with the roadmap pushing toward 2 nanometer in 2026. But the real choke point today isn't just transistor size. It also happens to be packaging. That's where CoWoS, or chip on wafer on substrate, comes in. This is TSMC's advanced packaging process that stitches GPUs directly to stacks of high bandwidth memory. So think AI accelerators like Nvidia's B200 and AMD's MI300 only work at scale because CAWAs ties the horsepower to the memory bandwidth. Right now, demand is so high that Nvidia alone has secured more than 70% of TSMC's CAWAs capacity for 2025. And as recent as August, the revenue rose 33.8% year over year, with year-to-date growth running above 37%. To me, the takeaway is really simple. Every AI roadmap runs through a foundry and a packaging line, and TSMC dominates both of them. So, as logic nodes shrink and memory stacks continue to grow taller, TSMC essentially remains the toll booth for advanced compute, with both market share and pricing power already locked in. By now, you should be seeing that there is a new arms race around technology, and all the major hyperscalers are pushing the limits. The only top limit that I see is wherever Moore's law finally pushes back. But for now, all of these companies are iterating new forms of technology simply to outdo one another. And for me, as an investor, this is an incredible time to experience. Now, I'll quickly shift over to Alphabet as my next stock, which doesn't usually grab the same AI headlines as Nvidia or Microsoft. But when you look at the numbers, it might be one of the most undervalued mega cap growth stock that's in the market right now. You see, Alphabet trades at about 23 times earnings, slightly below its 5-year median of 25, and well under its peers like Microsoft at a 36 or Nvidia at nearly 40. And then we have their free cash flow yield, which is a healthy 4.5%, which is noticeably higher than the S&P 500 average of around 3%. In other words, we're going to get a durable growth business at a cheaper entry point than almost any other tech giant. Let's move on to our next company of MongoDB, which builds databases that stores information in flexible document-style records like JSON, instead of rigid rows and tables. This makes it easy for developers to handle messy, fast-changing, or unstructured data without endless migrations. Their cloud service, Atlas, automates scaling, security, and performance so companies can focus on building apps instead of managing their servers. Their recent quarter's revenue hit $591 million, which is up 24% year over year, with their service Atlas growing 29% year over year. And their partnerships are also pulling their weight, where they have tight integrations with AWS, Azure, and Google Cloud to make it easier for enterprises to adopt Atlas as their default. If you've ever worked in databases, then you know how powerful MongoDB and its JSON flexibility will have huge potential, because most databases handle either old school data or new AI data, but not both. And MongoDB Atlas does precisely that in one place. So building AI apps gets way easier. They happen to offer a solution that many companies don't even realize that they need. And an item for me in their financials is that they have been operating mostly with negative margins. But the moment that they hit 2 consecutive quarters of positive margins, and I fully expect that their stock price will blow up. It happens to be a story that I've seen time and again, and it's exactly the type of situation that I keep looking for. Well, that wraps up my list of stocks that I've been buying on the dips in September, and I really appreciate you hanging out with me. As always, thanks so much for watching.